like the Euro CAD or the Euro Australian.
Okay.
If anyone.
Okay, well, let me go over some rules first, okay? So, pardon me. Primarily, what we're looking for, and you'll see there's probably a few trades in here. Primarily, what we're looking for is we're looking for trend trades. And for us, trend trades are utilizing the, and we're just here, we're looking at an uptrend. We see what's happening. We're looking at the 4 different moving averages. I use a 200 just because I'm comfortable with it, and it's what I've had since I started using this system a few years ago. But we use the 180 linear weight 1. We use the 90 linear weight 1. We use a 30 EMA. And we use the 10 EMA. And what we're looking for is we're looking for all of them to be in order. All right. There's 2 types of trades that we look for, but I'm going to talk about the first one, which is our signal trades. Is we look for a retracement down and close below the 10. Okay. Then whatever candle breaks above the 10, we get a signal. So that's our signal candle. This candle right here is an example. All right, it creates a signal. The very next candle, if that candle breaks above this signal, we're in that trade. Okay, we don't wait for the finish of the candle. You know, we're in that trade as long as everything is in order. Okay, as long as everything is in order. Now, I know there's a lot of talk about in the room about the oscillators, and you know they're there just for confirmation. And if you really look at it, they're good confirmations. You know, so if you're looking at this one here where I've got it marked, or I've got my crosshair there, all right, the stochastic has come down. It's below 30. Has come back up on this candle. It's turned blue. Okay. And my RSI is nicely above 50. It's not hovering to 50. It's nicely above 50, and it's pointing upwards. So that tells me that that is a good risk to reward trade. Okay, that's just an oscillator telling me that it's, you know, it looks like it's a good trade. So I'm in this trade right here. I'm looking for 3 to 4 pips. So where would I where would I normally set my take profit? My take profit is the next swing high or the big number. My stop loss would be the next big low, or the next low, which this one would have just been created at this point. So this would have been the swing low from here. So my stop would have been 9 pips. My estimated take profit would have been 13.8 pips. Okay, or you're looking at price action, so you see that you have some stalling here. So then, you know, you're looking at 8-9 pips. So right there, that's a 1-to-1 ratio for reward. All right, that's kind of what you're looking for. Or you can look to the next big number, because if you see, when you're looking at big numbers, you know, you see that it came down and broke through the big number here. This is what number is this? This is 0. It came back up, you know, messed around the big number. It went up to the big number. I'll answer questions in a few minutes, guys. I just want to go through this, and then I'll see what questions you have about this. Okay, came up to the big number here, couldn't pass it. Came back down, went up, tested it, but couldn't close above it. Went up, tested it, couldn't close above it, went back down. Went up, finally broke through it, came back, tested the bottom of it to try and go back down, it couldn't do it. Went up, was heading for this next big number, came back down to this big number, couldn't close below it. Tested it, closed above it. So the big numbers are very, very important. Okay. You can see, like even right here, you can see a big number where it just would not go through that big number. What we use for big numbers is zeros, 25, 50, and 75, and then back to 0 again. All right, so that one's a 0 again. So that's what that's how we trade this. Okay. These down here are, again, important for new people. I don't always take them with the trend. Like I might take a couple of trades when it's way up here, like right here. I might take the second trade, even though I know the oscillator, the stochastic is moved way up, but it came down from the bottom and is moving up. So I'm kind of comfortable in taking that second trade again for another 6. So I'll take this trade, get out, take this trade again, and get out. I like to take 3 to 5. I've been lately taking anywhere from 3 to 10. But again, I look at price action. What is it doing? Where, is it got a really good, strong upward trend? Are my moving averages fanning apart? So I look at all of that stuff that helps me. Where's my next position of resistance? Could it be these almost double tops here? Could, which it was. You see, if you look at this candle here, it stopped right here, and it could not go past all of these, these candles right here. There was an entry here. Okay, what's not an entry? This is not an entry. Okay, here we have an inside bar. Next candle did not break. The next candle did not break. This candle did break. However, the further away you go from the signal candle, oh, well, we actually had I forget I had this for a second. The further you get away from this candle, the less likely the trade is. Okay, but here we had an entry here. You could have taken it on this one here. All right, but if you look at that, it is a bit of a riskier trade because your stock is going down. Okay, yeah, you'd had your 3, but your stock here is going down. So, and that's close to the London close. So I'm just using these as examples. We don't trade normally. We'll stop trading about a half hour before. So probably this, or in this area right here, we'll look at the trades, but we typically never, and ever, I can't say never ever, but we typically never take trades after New York noon or London close, because then there's only one player in the market, or two, Canada and U.S. So I hopefully, and then the second trades. So any questions about the signal trades first? Let me hear. If you guys have a mic, you can ask your questions, or you can type them. I don't care. And nobody has any questions? All right, I'm going to go on to the next signal that we look for. We also now look for an inside bar. Okay, an inside bar. Yes, I take profit based on my last. Oh, that you put that in a few minutes ago. How would you handle a trend change in the case of a reversal? Well, we're looking for, if the trend changes, we're looking for these moving averages to trade. If the 10 and the 30 are below the 90 and 180, we normally won't take those trades if they're opposite of each other. So if the 90 and the 180 are opposite of each other, we're probably not taking. We're going to start looking at shorts, even if the 10 and 30 are above the 90 and 180. We really want to make sure that these two are in the right order. Okay, that's telling us a long-term trend change or longer-term trend change. So, and then these will slowly move their way back down and cross below them, and then that's when it's really the perfect order of taking the trend changes.
On this setup, it takes quite a bit of price movement to change trend, quite a bit.
Yeah. Okay. So the other, thanks, that was a good question, by the way. Here's another trade that we take, is this inside bar. Okay, this inside bar here, or this inside bar. Okay, we will take inside bars. And the inside bar rules don't necessarily need to follow the stochastics, because what happens with an inside bar is normally the stochastics will change in direction and turn different color, because that's kind of the direction it's thinking on going, but it was exhausted. So this inside bar we're looking at here is inside this candle here. Obviously we see the market was going up, 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 and then we had a little pause here.
Yeah, trend is up.
Trend is up. All of our moving averages are nicely and fanning, starting to spread out, and they're all pointing at 1 o'clock. 12:30, 1 o'clock, 2 o'clock, 2:30. They're all pointing at really nice levels of going up for long trends. So, this candle here, the wick showed me that it's going to push north, because it was close to 50% of this candle. All right, if it had closed way down here, I'd be a little bit more sketchy about it, but we would take the break of this candle. So the break of this candle here, boom, there's your take profit. Now you're trading outside the box here. Okay, that's another question we get a lot of. Well, you guys say trade inside the box, trade inside the box. Well, we're trading outside of the box here, but we broke the last box. Okay, we know that price action is pushing forward, pushing northward. We're going to take this opportunity and take the risk of that trade being a successful trade, and boom, there it was. Okay. Somebody had a question?
So in this case, the take profit would have been at the round number or big number.
Correct.
Right.
So that there would have been 8, and then you would have established, obviously, when you're looking at this, the swing low is 28 pips away. Well, that's pretty far for a stop loss. So you can look at another swing low, because this is obviously some news in here. You can look at this swing low over here, which is a little bit more comfortable. It's 10. Like you don't have to go with the previous swing low if it's creating this huge mountain climb, which we don't know this at this point. I'm just showing this, and then I'll go back and I'll show you some actual some trades. And so here we are, boom, in, and take your profit. Okay, here's an inside bar here. This one didn't break, but this is another inside bar. So I would be in this inside bar. And as you can see, if you're looking at my stochastics at the bottom, all right, they're all the way up here around the top. But I'm still in this trade, and I'm looking to go north. Boom, and my take profit is the big number. Now, this big number is a 25. Okay, so the two really big numbers you really want to watch out for are the 50 and the 0. The 25 and the 75, they do have a tendency of popping their heads through them. So you could have stayed in this trade for a little bit longer. You could have stayed into it for up to the top of this swing high that was being created at the time. It was created by this candle here. So you could have stayed into it to there, which was 13 pips. Okay, or you could have taken your money, taken your 4.5, 5 pips and got out, which is what I would normally do. Now, this inside bar here, it's a little bit more cautious. Okay, because we're now in new territory. All right, we've already, you know, had a session high here, so we're looking to get to that session high. There's an inside bar, there's a break. You've got 2 pips to there. You're looking for 6. You know, you know, if you'd have sat in this trade, you'd have sat into it forever to get what you wanted to get. So to me, you know, I'd have probably been happy with just taking a pip or 2 or 3 on that, or I wouldn't have taken this trade because, pardon me, because the actual inside bar of the body is much bigger than the wick itself. So I would have actually not wanted to take that trade. And I'll go through some candle by candle examples here so that you guys can see them. So you get the picture on the inside bars? Am I missing anything, Roger?
I don't think so.
Okay. Anybody with a question before I move on? Tan, you got a question?
Nope.
No. Okay. All right, I'm going to move on now. I'm going to move back. I'm going to check. I'm going to get you guys to give me a different pair to check. Tan, you want to?
I just wanted to ask: do you always trade the 4 EMA break?
The which? Sorry.
The 4 EMA break. Do you always trade?
I don't trade the 4 EMA break too often. Roger trades it all the time. Obviously, you can see the 4ME break has got some good good opportunities in it as well.
Yeah.
I'm still quite comfortable with just the. I get enough signals. You know, I take my 15 or 20 trades in my 2.5 hours. I'm quite comfortable with. Yeah, I mean, yesterday I took 14 trades in an hour and a half. So that's just off the 10. So, you know, why do I need to, you know, I like watching the 4. It gives me a bit of a comfort for confirmation for my inside bars. But yeah,
if you don't mind, can you put in the chat, in the GoToMeeting chat, the colors of the MAs and the number of each, so we watch it and it's clear to us which MA is which number? Or if you can say, I will just start.
You know, I will. I'll drop a PDF in the room. Okay.
Yeah, will be great.
Okay. Would you recommend a longer time frame? No. You're not even going to ask me why. I think they're afraid of me. No. No, if you want to look at a higher time frame, let's look at one for a second. Okay. A higher time frame means you have to have higher stop losses, and you're looking for obviously higher take profit positions. All right, you know, obviously you see here we got, you know, we don't trade here. We only trade in London Open. So here we are in London. We're looking for crosses. It takes, you know, there's our cross here, but we don't have a cross below the 180. So, you know, if we had taken a higher time frame, we wouldn't have really got into these trades till after London close. So, you know, there are plenty of opportunities here. You know, if you'd have taken this trade here and stayed into it, you know, you'd have done well. But we just like to get in and out of trades. All right, in and out, get in and out, get in and out. Yeah, we don't want to sit in the trade for 2 or 3 hours. You know, we don't, if we don't have to. We don't want to. We don't want to. We on a higher time frame. You know, you might be looking for 20 pips, 30 pips. We don't want to get 2/3 of the way there and then have it turn around and close you out at you know, break even. You know, I mean, that's a lot of extra work. That's exactly it. You're right. Quick pips, you mean hit and runs. You know, get more people on the bases, you'll get more people going around, right? You know, you'll get one guy that has a hit and run, you only got one score. You got bases loaded, get a guy with a hit and run, you got 4 people in. Right? You want to use a baseball analogy. I mean, I like to load the bases before I have my home run guy come and but you know, get on the base. Get on the base. Take your money. Take your money. Take your money. You know, don't give it back. That's kind of the way we look at it. That was a question from Yasmin. All right, thanks. No problem. All right, so if anybody wants to pick a pair, anybody? Tan, you want to pick a pair?
I'm looking at it.
No, don't look at one. Just pick one. Just call one out.
Yeah, using JPY.
Who is that? Okay. All right. Okay, so this is, you said UJ, right?
Yeah.
Okay. Let me, all right.
It was a turd yesterday.
It was. I think that's why he picked it. All right. So, now, so if you guys, I think it works on most of them. I've only come across one person that the F12 key doesn't work for some reason. If it doesn't work if you're using a Mac, I know that for sure. But if you wanted to do some of your own testing, you can use the F12 key on your keyboard, and it will move. Make sure your auto scroll is off, and you guys can move it one key at one candle at a time. All right, and so let me. So there's New York midnight, London open. Okay. All right, so here we are, London open. All right, my moving averages are starting to come into line. My 10 or my 180 and my 90 are flattening out, but they're coming upwards. Okay, but they're not. Everything's not 100% in right order yet. All right, it should be in right order. Okay, to take the trade. So we're potentially looking for shorts here, but we see that the 90 and the 180 are leveling out. So there is a potential for and they're coming closer together. There is a potential here when you look at these for a cross at some point in time down the road. You know, so you got to keep that in the back of your mind. All right. So we had a long signal right here. All right. Your 90s move. Oh, that's Chad. Your 90s moving up. Your 180 is leveled right off. You know, your 10 and your 30 are in order. Okay. I have a confirmation that it's above the 200 here, which I like that for myself. Stochastics is lower and turn blue and coming back up from down below the 32, your RSI is pointing upwards and above 50. So let's see what happens. So we have a signal here. I'm in this trade. I got into it way late, way late. Okay, way late. I got into it 2 pips too late. You want to get in as close to this candle as you possibly can. All right, but I'm in it, so I'm looking for take profit to be, 5 to 6. Stop loss would be my 200, which is 6 pips away. And up she goes. All right, so I'm in, I'm out of that trade. I don't know why it didn't mark it. Oh, it's a buy stop. Why didn't it take that buy stop? All right, anyways. So that would have been, all right, so we have now another signal here. We have a break, but now if I look at my stochastics and my RSI, okay, now you see that my 90 here is now crossed the 180. Everything's starting to move upwards. There's my break. I should be in that candle right. I should be in that trade right there. That should be your entry. Your exit would be, you're looking for 2 to 3 or 4 pips. Stop loss be at the bottom. Now, your stochastics and everything are not 100% in order with them. So this is a riskier trade, but I mean, I'm sure it's a successful trade. If you'd have got in here, you'd have got your 2. Boom, there you got your profit. You can't always count on the oscillators. Okay, it could sit up here forever. It could sit down here forever. Right? If there's not big movement, then it'll range. It'll range like this here. You see all of this here? It just ranged. So your stochastics is just ranging as well. It's not creating these huge mountains. Huge mountains, so, all right. Now, I don't normally come in this time and trade, just when every once in a while I do, but let's see if I have any trades. So, these were some good trades here. I have an inside bar and it didn't mark it. I don't know why. There it is. All right, so I had an inside bar right here. All right, there's your entry. Right there, your stop loss would have been, well, it would have been 16 pips. Or I have the Tokyo channel on here, so it'll, which we start at, our Tokyo channel starts at midnight. And so I've got here a 9 pip stop loss. I got a big number here, which is 0. So that's going to be my target, the 0, which is 4 to 5 pips. Okay, so there's your entry. That would have been a successful trade if you'd have taken it. All right, and okay, so we're definitely just looking for longs here. So we're looking for either an inside bar in here or a pullback. So you like more little stochastic waves rather than huge. No, I prefer the huge waves, to tell you the truth. I don't like the small waves. As you can see here, stochastics hasn't changed. There's really been no pullback, so to say. Little wee pullbacks here. Little wee pullback here. Stochastic coming back down. personally, I like to see this, if I'm taking longs, I would like to see this stochastic down here. That doesn't mean I won't take some of these trades. Okay? It's just more of a risk factor to yourself. If you like these trades, then and they look good, and you've back tested them and played with them, and you like them, take them. That's, but it's your preference on how you take the trade. All right. All right. So now we have the stochastics coming down. We're still looking for, or only looking for longs here. We're not looking for shorts. We're not looking for any counter trend trades. Okay. We have a prime A trade right here. This is a beautiful trade for my liking right here. Okay. Doesn't mean it's going to be 100%, but this trade here, there's my entry. I haven't, my RSI is above 50. My stochastic has come down and is below 32 and is turned blue and is going north. If this next candle breaks, I'm in the trade. Okay. I'm probably in that trade because that's just the way I am. All right. And I'd have sat in this trade for a long time because I'd have got really pissed with this trade. I'd probably got stopped out. I didn't take it. Obviously, you don't see any of those trades on here, so I didn't take it. But let's see where my stop loss would have been on this one here. The big number, so I'd have been stopped out. That would have been my stop, this big number here. Just below it, so. And I don't think I took one trade on the UJ yesterday. I really don't. Okay. We have a short here, but moving averages aren't in order, so we don't take the trade. Yeah, you had to pick the one that I didn't take any trades on. Okay. This is an inside bar trade for a short. These two moving averages aren't in order. It's a riskier trade. But, it's a valid, it can be, and here we have a signal trade to the short. All right. Boom, there it is. You can be in that trade. All right. And we're done that pair. So, okay, so, pardon me, bigger waves give clear, big waves gives a clear view or put you on the right way. Okay, yeah, I would, in my opinion, yeah, it just means that there's been a little bit more price action. It's been a little bit more movement on that pair. Is really what it means to me. Okay. You want to pick another pair to go over? Somebody else? How about Yasmin? You pick a pair. Yasmin. If I don't have it on my charts, I don't trade it. So I don't have it on my charts. Sorry. But you know what? I can pull it up if you want, because it's one of Roger's favorites. Oh, actually, I do have it. Sorry, I do have it on my charts. I apologize.
What is it, pound New Zealand?
Yeah, I don't have that one. Sorry, I thought it was, no, it's the UCHEF is what he's looking at.
Oh.
All right, so let's go back and look at the UCHEF.
Dollar franc.
All right. So relatively here, what are we looking for? We're looking for shorts. Okay. There's our 180, there's our 90, we have a cross right here, our 10 and our 30 are looking short. I'm at midnight right now, so I'm still sleeping. I'm up now looking at the charts. I'm probably not taking any trades yet, but I've still looked at all of this to see what I'm looking for, and I'm probably still at this point in time still looking for shorts. I don't normally trade until Tokyo close, but just a little after Tokyo close. So here we are, Tokyo close, and let's see what we got. So we're looking for shorts. Everybody agree with that?
Aye.
All right. It's not posting my inside bars again. I got to fix that. All right. So we have here, just after, we have an inside bar right here. We've got good momentum down on all our moving averages. So we could take this inside bar. It's right at it's inside the box. So it's a good, again, these don't agree with, the RSI agrees with it, but the stochastic says it's going to go up. So let's see what happens. Okay. There is a potential trade here. There you are, you're in it, and boom. You know, let's see, good to go. There's your, you know, you stayed in that, you got 7 pips on it, or a guy out with your 3 to 4. You know, I'd have been happy.
Second inside bar there too.
And then there's a, yeah, I don't normally, but I don't normally take 2 trades in a row. And for you,
I always take the first one.
yeah. I don't normally take 2 trades in a row, but because I'm not U.S. based, I don't have to deal with first in and first out rules. Sometimes I'll take the second one, but not normally. Very, very rarely you'll see me in 2 trades at the same time. I think maybe I've done 5 or 6 of them in the course of this year. I couldn't tell you exactly, but it's a very rare thing. Anyways, so let's move on. So that was a good trade. I don't catch every trade too, because I'm looking at 17 pair all the time. I don't catch every single trade, which is unfortunate, because then, you know, who knows, right? No. All right, so we have a signal bar here and a break, so we're in this trade. This is, again, a golden trade. Moving averages, the right order. I moved a little too fast. Okay, there's your entry there. You should be in that. You should be in that trade. And your stop on this trade, 12 pip.
You had an inside bar after that first trade on that pair. To the left. Right
This
there.
one? Yeah.
No.
This one.
Over that one. Explain why you didn't enter that one.
Oh, no break, no trade. This inside bar, the next candle didn't break it.
Okay.
The next candle didn't break it. And
I think you're gonna, you know, you have different places to enter, so you
yeah.
have to break the entire bar for the entry.
And if you look at a lot of these, you know, inside bars, you gotta see the relationship between the body and the wick, in my opinion, as to whether or not you're going to take a body break or a full candle break. My suggestion is a full candle break, and then you'll start seeing, once you get more practice, you'll be able to see where you can take ones like this, which is this one here would have been a body break to me. All right, but I'm not going to go into all that explanation. You know, it's what you see and how you interpret taking these trades is important to you. Okay. So yeah, no, there's an inside bar, no break, no trade. therefore, we don't take the trade. So here we are. We're in this trade here, short. Let's see what happens. And we got our profit. We're out. Yes, sir.
Yeah. You may have answered this question before, but I was absent for a little bit there for 5 minutes. Does the size of the signal candle has anything to do with the trade? For the length of it?
Well, the size of the candle itself, basically, obviously, as you can see here, it took a few candles to go up. Okay, it took a few. We primarily do shorts, other than yesterday. Yesterday was mostly a long day. Okay, but if this candle is 25, 30 pips long, I'd be hesitant to take the trade, because most swings, if you really look at a lot of swings, most swings happen between 20 and 30 pips before there's some kind of pullback and retracement. Okay, so here, let's measure this one here. Let's see if I'm a liar. So that's 20 pips. Let's measure this one here. That's 10. Let's measure this one here.
Well, you got no volume at that time.
Right. So, but you see your swings. Here you've got 40 pips, but you had a little bit of resistance right here. You had some consolidation, so that's 14 pips. Or you want to take it to the bottom, it's 25 pips. So then it started to move again. So you've got some, you've got some exhaustion down here. 25, 30 pips. So if this candle is 25, 30 pips on its own, I'll only be, I won't trade. It's a news candle to me. It would be a news candle, and I'd be looking at it, inside bars, in direction of the trend, or in direction of the candle in which it was going. But I wouldn't take it for 10 or 15, 20 minutes after the big candle, just because I want to see what that candle, what the market is going to do with that big candle. Did I answer that question okay for you? I think so.
Yeah, thanks very much.
Okay, so that was a successful trade if you'd have taken it. There's an inside bar here. All right, this inside bar. Okay, we have good momentum down. There's an inside bar here. All our moving averages are pointing nicely. If we take this, our take profit is the next swing low, which is 3 pips. Establish your top. You can have a 17 pip if you want, or it could be the 30, which is 10 pips away. So, but let's see what happens here. No break, no trade. Okay, no break, no trade. All right, it's now a non-valid candle. We're now waiting for the next valid signal. 1, 2, 3. It's no longer a valid trade. So let's take a look. Keep moving. We have a signal bar here. All right. There's our signal bar. We're inside the box. We got 4 pips to the bottom of the box. Stop loss of 8. Okay. RSI is still below 50, which it kind of come up and it tried to peak above 50 a few times, and it's going down below 50. Stochastics is turned over, but it's only turned over at the 50. So, in my opinion, a little bit riskier trade. It's not where I want my golden trade, which is up here. Above this. But it's still a valid trade. Now let's see what happens. It's a valid signal. Sorry, not valid trade, valid signal. Boom. You're in, you're out, you got your money right away. All right. You had a break, you got 6 pips on that. Be happy, go, get out. All right. And oops, what's going on here? Sorry. All right, we have another inside bar. Do you notice any difference in results if you trade without stochastics? Or I could. I've even traded. Yeah, I've traded without them, but they're just—it's just a comfort thing for me. You can trade without them if you don't like them. You don't like them, you remove them. It's that simple. Okay. But Roger and I have traded this system for 2.5 or so years. We've put a lot of screen time into this. We've put a lot of testing different moving averages, testing different oscillators, testing in the box, out of the box, inside bars, outside bars.
You want me to? I can just tell them why I have it on mine. It's because I took a course from Craig Harris on price action, and he used the stochastic to follow price action. He says that is the best price action follower, but he doesn't live by it, and you shouldn't live by it, and you shouldn't use it as a signal. It's just a confirmation. It's just a comfort. It's not price action rules every time. It's just something to look at to say, well, it's going down. Let's take it. Do not determine your trades on the stochastic or any other oscillator for that matter.
Exactly. I agree. That's why I keep saying they're just comforts. They're just confirmations of, is this a potentially good signal? The signal itself is all you really need.
There's basically nothing in that bottom box that should be determining your trades. Everything that determines your trade is on the big chart. This is just a confirmation. It's just a comfort. Don't base your trades on it.
Okay. All right. Yeah. It says I just use it to determine oversold and overbought zones. That's all.
Okay. Well, that's exactly what it's for.
Yeah. All right. So let's see if this inside bar is a valid, good trade. Now, I'm taking a bunch of these. I'm showing you these charts and the potentials of the opportunities on these trades. However, I want to make it very clear, I don't see any news when I take these trades. So if some go against me, you always got to watch the news. You've got to know when there's big news. All right. You have to know when there's news. Medium to big news, you have to know it. Have 2 or 3 different news feeds all the time. Don't just I have Forex Factory, I have Investors.com, and I have them running all the time. And depending on what, if you've got a broker
You've got one screen. All you got is news on it, isn't it?
I've got one screen and all it has is news. And it's important. News is to me, news is important. Because if I've got some big ass announcement coming up, like non-farm payroll or or anybody speaking, then you want to make sure when you get whatever news you get is not a delayed news. Now I've noticed that Forex Factory is delayed sometimes, and the reason that it's delayed is because it's a free service, and there's hundreds and hundreds and hundreds of thousands, if not millions of people pulling from it. So therefore, it's a lot of weight on their servers. So therefore, it takes some time to get that stuff out sometimes. So that's why it's good to have 2 or 3 different ones on there. Look for a good news feed and you know, and get Reuters. You know, Reuters is, but it's expensive. Anyway, so pardon me. So let's see here. Let's see what we get. Okay, we got a break, and we're in the trade. Okay, there's our entry there. You know, 3 to 4 to 5 pips. Boom. Let's see how I did with that one. Okay, I'm out of the trade. I'm happy with my 3 or 4 or 5. I'm really happy. I didn't give 3 or 4 or 5 of it back in the chance that it could go way up here again. All right. Let's see. See, if I didn't get out of that trade, I'd be losing money. So I don't like to lose. I don't like to give it back, guys. Really, I don't. You know, I'd be giving back $50 versus taking $50. Get in. Next candle. Risk is over. The risk is over. The risk is over. The risk is limited to the time frame that you're in the trade, but the time is not limited to take the trade, like within binary options. That was just a swear word to me. Okay, but that makes a lot of sense to a lot of you guys that are new here because you guys trade binary options all the time. All right, you may have got in here on this candle in binary. You may have, for whatever reason, you may have got in here on this candle and your 5-minute closed in this candle, and you'd have lost the trade. All right. Like you may have, your strike point might have been down here while your 5 minutes later is in the middle of this candle. Depending on what time you got in on this candle, you'd be out here. All right, so that's why I got out of them many years ago, and I don't even look back, but I can get out, and that's the other thing. I can get in. I'm like, man, I'm up. I'm up $40, $50. I'm up 4 or 5 pips. Exit. Close the trade. Put the money in your pocket. Okay. We're not married. This is one thing I get a lot of people saying, well, you could have got in here, and I get this all the time. Well, you could have got 15 pips. I don't want to be married. I don't want to be married to the trade. I want to be young and single, and I want to, go to that dance club and go bang, 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 bang. I don't believe I just said that, but I use that analogy for you there, Roman, because you have a nightclub happening every night at your hotel there, you see.
Yeah. Well, quick question. With the deposit of 500, how much would you say it's reasonable to risk in lots term per trade?
Oh, I don't know. Well, first and foremost, yeah, 1 to 3% per trade, no more. So
that's
if
like what, like 0.03 or something?
No.
0.05 is good, I think.
Yeah.
0.05.
0.05. But you're gonna have to make sure you keep your take profits and your stop losses tight, and you will end up with a few more losses than you'll want, but you'll end up with a lot more gains. But your risk will be lowered because you don't want to have a 2-to-1 loss ratio or a 3-to-1 loss ratio, because then it takes a lot.
Right. On
such a small account, it takes such a lot larger position to get out to get those back.
Also, is it fine that I have chosen 1 on 300 leverage with my broker?
Again, that's up to you. That's more.
I'm not really,
we're not going to manage your money for you or anything. You have to figure that out yourself.
Yeah.
You're a grown man. So.
Yeah. Thank you, Roger.
Can you give me like?
One guy at a time, please. Finish Roman real quick, because Roger's comments.
Can you?
Go ahead.
Yeah. Can you explain to me about leverage in few words, because it might be something I'm not very clear about?
Baby pips.
Thank you, Sean. Thank you, Sean. Go to Baby
Go read that
Pips.
first.
Yeah. Go look at leverage. Go to Baby Pips, babypips.com. Go to this class. It's a beautiful class. It's free. I don't know if you've been there, Roman, or not, but it's got everything you ever want, and it takes you right from zero to graduate school.
I see.
And I cheated on the tests.
You cheated on. Yeah, you can take by the way, you can take tests on. Just so you know, if you sign up, okay, if you sign up for Baby Pips, and it's free. If you sign up, you can do the tests, and they'll actually keep your history. You'll stay there for what you've gone through on their courses, and at the end of. But just don't click on the ads, because the ads just will drive you mental. Because that's how they're making their money. Okay, but they have if you sign up to babypips.com, you will get when you go through the school course and you finish each level, there'll be a little test at the end of each level, and it'll score you 8 out of 10, 9 out of 10, 0 out of 10 if you weren't paying attention and got somebody else to do it for you. Okay, but Roger's comment's important. Okay, we're not here. We're here to show you a system. We're not here to teach you money management and money risk, other than the fact to show you how to take the trades. If you want to be a gambler and you want to put 100% in on every single trade, that's your call. That's your money. That's your call, not us. Okay. You want to use a higher, risk of margin, then you do. That's up to you. You don't need to.
I saw one the other day. It was 2,000 to 1.
Yeah. All right. Because just remember, no matter what, your reward is much better, but if the trade goes against you the wrong way, your risk is much can hurt a lot more. Okay. That's all. So leverage is something that you have to be comfortable with, and
hey, there's Mr. Leverage right there. Adil.
Oh, Adil. Oh, Mr. Leverage. I love Mr. Adil. Yeah. Anyways, yeah, that gentleman that just popped up on my screen there, Roger and I have known him for a couple of years now. He's got a rich sister. He throws money at the market like it's going out of style, and he'll and every single time he loses it all. Because he'll go in, I think it's going to go to this level, and he'll just max it right out, and sometimes he gets it and he does his little happy dance, but a lot of times he doesn't. Anyways, so that's just it's just a game for the rich people sometimes. All right, so we're moving on here. All right. See, I haven't been pushing out the 4s, and I guess I could have, because obviously here's a break above and there's a close below the floor. There's there's a signal. Boom, you're in that trade. Okay. And this little guy right down here, what is this? This is just comfort. This is just comfort telling me it's comfort. Yeah, it's turned and come down. It's comfort. It's not the reason I took the trade. All right.
Oh.
Yeah. All right. So we had a big up movement here. We have a down signal. Okay. Cross. Close. Okay. This doesn't look good to me down here. So I'm not comfortable. All right. Doesn't mean I won't take the trade. I got 6 pips to go there. My stop loss. This swing high wasn't created yet. Okay. So my stop loss will be there. So basically it's a 1-to-1 trade. Well, actually, no, it's not. So it's 11 pip stop loss. So, let's see what happens. So I'm not going to take this trade, guys. I don't want to take it. Oh, bummer. Should have taken it. I also, the other time I don't like to trade is right at an open. All right. I don't like to trade right at an open. So you need to know when your markets are opening and closings. I don't like to trade right at an open or a close of a market. Okay. I don't like to trade for at least, 3 or 4 candles to see what that market's going to do, because now, New York's open. So I could, you could have taken that trade, had your 5 pips, but and kept going. All right, we have an inside bar here. All right, we have a nod and a wink here, but I'm not going to tell you about that one. I'm getting myself in trouble, Roger. Help me. No. I'm a grown man. I can do it myself, he says. All right. So we have an inside bar here. RSI and stochastics don't agree, so it's and session. There's nothing here to stop us. Nothing. We can go back a lot further and look. There probably is something back there. All of our moving averages are really doing fine. Like this, the 30 is pointing down at 430. The 10 is pointing at 530. Everything's fanning out and widening open here. So let's there's your entry right here. Oops. Let's do it this way. So there's your entry right there. Let's see what happens. No entry, no break. Boom, there it is. There's your entry. All right, 3 to 5. Let's see what happens. You got it. Okay. Now Roger would have got a signal on this candle right here. Broke above the 4, closed below the 4, but there's his entry there. But he would have taken this, closed below the 4 on that IB. Okay, not on this signal. All right. So that was a good trade. Oops. Delete. All right, and F12. Any other questions here? Oh, there you go.
So that's definitely a downtrend day.
Yeah. So Gert posted in the room there for you, Roman, or in this little chat there. Some issues with leverage, okay? So there you go. Or some comments about leverage, not issues. All right, we have an inside bar here. All right, we have a big number. All right, we're 3 pips to the big number. It touched it. It didn't break it. All right.
What big number is that?
That's a 0.
Okay.
All right. Look out. Okay. Now this candle here, who is in charge on this candle? Can anybody tell me really quickly? Except for Roger.
Where you ask?
Who's in charge on that inside bar? The bulls or the bears?
Bulls.
Why?
Those are back-to-back pin bars, and the wick of the next bar is higher than the previous bar. I don't know. I'm just
no.
guessing.
Well, you have it. You have it. You're okay. It tried to push it. The bears tried to push it down. The bulls pushed it up. Okay. So to me, the bulls are in charge right here, not the bears.
I said bulls.
Yeah. Sorry, what did you say, Roger?
At that time.
At that time, the bulls are more in charge.
Yeah.
You look down here, comfort zone, not very comfortable. Okay. But we're still waiting for a break. So let's mark it and see what happens. Okay. That would be our entry there, or below it. Okay, our target's only 3 pips away, and it's a big number. It's not a 25 or 75. It's a 0. So there's a lot more risk in this inside bar than All right, so let's see. Look at that. No trade, no trade.
No break, no trade.
No break, no trade.
No trade.
Boom.
Mama.
Okay. I would not have I would not have taken that inside bar, just so you know. The reason I would not have taken that inside bar, even though I now see that it was successful trade, is because being so close to that big number, I want the next bar. I don't want to go 3 bars away, okay? Break on the next bar, 80% probability. Break on the following bar, 60% probability. Break on the last bar, 50% probability. I don't want 50% probability. I want 80.
An advantage.
Okay. You guys get that? That's probably something I haven't really gone over a lot, and I have mentioned it, that's why we only look at 3 bars, but we look at the 3 bars, the big number, where's it at? We look for a little comfort zone down here. All right, I wouldn't have been in that trade. Just not, it wouldn't have happened. And I'd not had the money, but I don't worry about that. I will look at the risk to reward for me. All right. All right. So we had pardon me. Break, close. No. And now we're going to potentially get another signal. Here's a up, close above. Hit the big number.
Mm-hmm. Bounced off of it.
Okay.
Resistance, didn't it?
It became resistance. There's our inside bar. Our RSI is below 50. Our stock is still moving up. Let's just take a measurement here. We got 17, 18 pips to the swing low. We got 7 pips to the swing high. That right here. Okay, we got a big number. We have an inside bar and a signal bar at the same time. That's a pretty strong candle. And then we're looking at the moving averages. All our moving averages are in order beautifully, nicely. So let's see what happens. Let me delete this here. Let me see what happens. F12. There it is. You're in the trade. You made your money. That's 11 pips. I'm well out of that trade, I guess. But your target is the big number. You could have stayed in it for 19, but that would have given you an opportunity for risk as well, because it doesn't always go to the big number in the next 1 or 2 or 3 candles. It might bounce around for a while. So take your profit. Don't ever be afraid. Don't ever be afraid to take your profit. All right. We have another inside bar here.
This thing never stops, does it?
No. So Sean, would you take that inside bar? I'll put you on the spot, buddy.
I probably would, because it looks like that's like a mini not reversal, but an area of consolidation at that point, and it's because it's such a strong downtrend at the moment.
Okay.
I'd take it at the top of the bar, though.
Okay, who's in control on that bar right now?
Oh, the bulls are in control on that bar, but I'm looking at that. What's that next green number there, or green line that you have?
That's 20. Yeah, it is. It's 25.
Oh, it is.
75.
Yeah, I'm just looking at the strength of the downtrend, the fact that it has come down a lot. It's coming back up to that number. And then because the next swing isn't that high up, I'm willing to take that risk. That
All right.
Probably 8, 9 pips or something.
Okay, that's good. Now I'm going to throw another question at you. Would you take it on the body break or on the whole candle break?
Well, actually, I'd probably, on this one, I'd actually probably take it at the level, but that's not exactly probably what I should be doing. Like I would have taken it on the reversal to the 25, back short. But I know what you're saying. But if I was a better move would probably be to take it on the full candle break.
Okay.
Probably a safer move.
All right. I would take
You know
it
what I'm
on.
saying?
I'm taking it on the body. Let's see what happens. I'm in. Now I'll explain why. That candle's 50-50. Body, pretty much 50-50. Body to wick. All right. I would have taken it on the body. Now, to be safe, take it on the wick. You're right, absolutely. But I've noticed enough of these candles after many years of practicing on these candles. What I'm looking for. The reason the body on this one here is because you're right. We had a big push up. We had a bigger push down, and there's going to be there's some exhaustion here, but nobody. The bears are in control.
Yeah, it's like
Bulls are in control. Bulls are trying to get into control here, but it was a level playing field, right in the middle, level playing field. Mm-hmm. That's my entry there. It would have been my entry.
You wouldn't have thought of taking it on the level itself, just because of the price action is so indicative of that.
No, and I'd have been in and out of that trade, no problem, right there. I got my, 3 to 4 to 5. I'd have got it. But those are things that you'll see, and after lots of practice, and lots of failures, and lots of, So let's keep moving. All right, we have an inside bar here. Anybody interested in it?
Not me.
Not selling anyway.
Okay. Anybody else interested in it? No? Okay.
Nope.
Good. That's a good answer. Okay, what about now?
Yep.
All right.
What time is it?
10:30.
You got an hour and a half left in the session?
Yeah. Okay, so let's look at this. It's okay. It's going to trade outside the box, though. Actually, this box hasn't been formed yet. Just that swing low is there. That box hasn't been formed yet. So our target is 12 pips away. Our stop is the big number. Oh, that's pretty far away, 34 pips. This swing high had been made. 1, 2, yes, it had been made. So our stop would be 15 pips. You could set your target to be 15 pips away. This is a big number of 50. Okay, let's see what happens. I'm in too. No, I'm not in yet. But I'm not in yet. Why am I not in? No,
because the brand didn't break.
It didn't break. It didn't break. Well, I have another entry though. All right.
I'll take that.
I have another entry.
Because it scared me too much on the last swing, all those rejections off the...
Okay. If it breaks, I'm in. I'm in and I'm out. I'm in on the... I'm in. And I'm out. I'm in and I'm out. I have an inside bar. Anybody? Any takers?
No.
I'm doing this on purpose because there's what's sitting right here. The 75. It's a big number, right? You're gonna waffle around that big number. So no takers on that one. Okay. Roger, you take that inside bar?
Hell yeah.
All right. Let's see what happens. Shit.
No break.
No break, no trade. No break, no trade.
Taking profit. There you go.
All right. We have an inside bar. Anybody?
No.
Okay, good. We now have a signal bar.
Yep.
Why? Oh, it's 11:15.
Looks great. Perfect.
Ah, but what? Wait, what's this?
There's
Big number.
but what's the number? It's 50.
75.
75 right there.
It doesn't matter. 75. I don't bother.
Okay.
I
All right. I'm in that trade too, by the way. Let's see. There you go. I'm in. I'm out. You know, you got 9 pips to the bottom of the swing. All right. All right. We have an inside bar here. Any takers?
which one?
Inside bar.
No.
Why?
Going outside the box. I mean,
Okay. I like that. What else? There's another reason. That inside bar is really indecisive inside bar. It's, you know,
Mm-hmm.
it's a really tug of war. It's a tug of war bar. There's no direction on top of the wicks, bottom or top of the wicks as to, you know, who's in charge, right?
The big numbers at the top of that bar.
And the big numbers at the top.
At the bottom of the bar.
So I'm not in that trade either. And we're done for the day.
Only close.
Okay. So, any questions? Are you guys happy with what we're producing here?
yeah.
Yes, very good instruction.
Any comments? Anybody? You know. Yeah, I'll post this in the room, and you know, just so you guys know that we're here to help you, no matter, you know, when we're available, we're here to help you. We will, you know, we want you guys to we want you guys to succeed at this like we are succeeding at this. You know, the only thing that we ask is that you don't bring other trading plans, other trading ideas into the room, because and it's not because we think that our system is better than any others. It's because there's a lot of people in the room, and it creates confusion. Okay, that's really the only reason, the main reason, is it creates confusion for everybody, and then next thing you know, there's, instead of the few simple rules, there's a magnitude of rules and a magnitude of what ifs and a magnitude of this and a magnitude of that, and you know, then it turns the system into a not a good system. And this is a fantastic system if you're got the time to put into learning how to do it properly. And it might not take overnight. It might. Tan was one of the quickest learners that I think we had. But, you know, he was diligent in doing so. And he put the time and the effort in. And, you know, we got a young lady now that's put the time and effort in, and she's starting to post trades as well. She's doing really well with it. So the whole idea here is, and there's a few other guys too, you know, Kurt, you're one of them. You're getting it. Chatty, I'd like you to start posting a little bit more. You got to stop waffling. You're going from higher time frames to lower time frames. I'm not trying to point you out, but you know, you guys got to, you know, if you're gonna scalp, you got to scalp. If you're going to do trend change, if you're going to do intraday trading, scalping is not for you. You know, if you want to do long-term trading, scalping's not for you. It's not that it's not a good opportunity. It's just that it's not your comfort. And you know, I'm not interested in long-term trading. I've done lots of it. I hate it. All right, I hate the risk. Go ahead. You want to make a comment? I really like that everybody's starting to post. I want everybody to keep posting. Good, bad, or indifferent. Hey, post your losers too, because it will show you, and it shows everybody else that you're human. And then you can, and then we can, you know, the guys that are good at it, they can help you. Say, okay, well, this is where you should have looked at that trade, and maybe how you could, and you know, reach out to a couple of the good guys that are trading it. If they can help you out, I'm sure they will. All right. On that note, I don't think I have any other questions.
I had a loser yesterday. Let me show you if you have taken the trade.
All right, let me see. I can
Yeah.
put, I can. Oh, you're just going to post it?
Yeah.
Okay. Anybody else have any questions while Tan's putting this together and posting it? Come on, you can't all be shy. I guess so. Did
Still
you?
doing stuff?
Are you posting it yet?
Yeah, I'm just searching for it.
Oh, okay. All right. Yeah, Ted wants to post one that you can post it in the room if you want, or post it here.
Okay. 10, 15. Yeah. On that. Let's see.
No. All right.
What's he going to post?
He wants to post his. He had a losing trade yesterday. He wanted to post it and see whether or not we would have taken the trade or not.
Yeah. Hold on a second.
No problem. I can't believe that nobody has questions. That floors me every single time that I do this.
A trend on that pair,
Yeah.
but that's what we're looking for.
I posted that.
Oh, you posted it in the room. Okay, let me take a look here. Oh, where did you post it, Dan? I don't see where you posted it.
Yeah, I see it.
Oh, it's in the room. Okay, sorry. All right, let me pull this over.
And you took that signal bar, inside bar. Yeah. Well, you know.
This one right here? Inside bar?
Take profit real close. I mean, it's stop loss.
Stop loss. Well, that was a valid. That was a valid. Well, you see that candle. I just got finished talking about that candle. That inside bar. There really was no. If you really look at that inside bar, the top wick and the bottom wick are almost identical.
Indecision.
So it's an indecision. If there's more weight to the bottom of the candle, then it would have, you know, the bulls would have been more in charge. If there's more weight to the top of that inside bar, then the bears would have been more in charge.
What time of day is that?
I don't know. That's a good question.
It's after, right after New York Open.
New York Open. Okay. Well,
I started my trading with a losing loser yesterday.
yeah. Well, that would have been my only. When I look at my inside bars, I do look at what the inside bar is. If the inside bar is all body with small wicks on either end, it's an indecision candle to me. So it's a little bit more of a riskier trade. If it's got a huge wick at the top, then and the body is at the bottom, I'm more into that. I'm more into looking for that setup, like the inside bar four candles beyond that. 1, 2, 3, 4. Yeah, that inside bar would have been a taker for me. But obviously not until it broke, which is the. So I would have you see here the difference here of this candle to this candle. And even this one here is a little bit less of an indecision because it's an inside bar, but it's in the squeeze. All right, but this inside bar here, if it had broke, I would have taken it because there's more wick to the top than there is to the bottom.
Yeah, I understand.
Okay, so there, but I wouldn't have. Obviously, there's no trade, no break, no trade here. There's your entry there, and boom, away you go. So that's something that I really haven't. We really haven't touched on a lot. Is we say inside bars, but there are conditions to inside bars as well. Well, you could pull a fib from anywhere, So where do you pull a fib from? You pull a fib on a 5-minute candle. By the time you've done that, you've missed looking at 15 other trades. You don't really need a fib to see what I don't need a fib on this fib here to see that this candle came 50% back into this candle. It's just you can see it without really looking at it. I don't need a fib here to know that that's this candle here is 35% into this candle here. I really don't. You can fib without fibbing. All right, if that kind of a twist of the tongue, you can fib without fibbing. So I mean, if you're looking at higher time frames, it's a different story. I mean, you look at this one here, fib this candle to this candle, this breakdown here. I'm probably pretty close to suggesting that's 50%. I can fib it and show you. I think that's where it was, there to there. So I mean, I know that I'm in here. I'm in around 50% mark. So, but how do you fib? I mean, where do you fib from? Do you fib from there?
Swing high to the swing low.
Right. And by the time you do all of that, remember, we're not trying to be married to any trades here, okay? We just want to take our profit and get out. All right. Any other questions or comments? Anybody? No. Okay. Well. I will. I'll stop this recording now then, and I will. Oh, go away! Leave me alone for a minute. I'll stop this recording now, and I'll move.